Okay, hello everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Mike Boutros here with you. Good morning to everyone in the room. Mario, Premendra, happy Wednesday to you as well. Howdy, Mike Boutros. Must be Oh, Eileen, that the thing that came up. No worries. All right, great to be with you guys here this morning. So we just got the release real quick of housing starts in the U.S. Slightly weaker than expected. You did see a drawdown of 3.8%. We were expecting a gain of 2%. PPI numbers also slightly mixed on the session. So you got a little bit better on the final demand here month on month. Core, stripping out energy, comes in slightly stronger than expected. So mixed batch of data. Remember, PPI numbers aren't going to be quite as critical as the CPI numbers we get on Friday, okay? Those CPI numbers are going to be a lot more telling as far as where we're seeing broader inflation start to pick up and whether that's going to be enough for the Fed to really feel comfortable moving forward with the tightening process. So not going to really get any major core data beyond this today. Just looking down, you also get industrial production numbers a little bit later in the session, 9:15. We'll see if we can catch that here in the webinar. But the most important thing today will be the Fed minutes release, and that comes at 2 o'clock Eastern. Now, Jamie will be doing his intraday, his midweek strategy webinar today, guys, so don't miss that. But with regards to the Fed minutes, we're not really expecting much, right, this time around. The vote was unanimous on the last decision. So we'll be looking to see if the minutes have anything for us as far as giving us a tell on where the Fed stands. That being said, not really expecting much. A look at relative performance for the dollar. You see mixed performance here with the Loonie, Aussie, and Kiwi. All the commodity currencies seeing a nice little rebound here. CAD biggest performer in the session, down up 0.39%. Aussie up 0.2 and Kiwi with a gain of 0.12. Still looking at the Kiwi. Took some shorts on this last night. I noted in the webinar it was happening real quick, so I didn't get the report out, but I'll show you how that played out. Swissy down 0.3%. We'll also take a look at that, pressing some fresh highs there on dollar Swiss. Morning, Mike. Euro CAD, please. Daily. I'm short from 57.85. First target. Sure. Let's take a quick look right into that. Euro CAD, huh? Okay, that's the daily. Okay, so short from 57.85, you got a really nice entry on that. Your target down at 49.20. Give me just a second here, Mark. Let me do some on the fly for you. Yeah, I like that level a lot. So 49.20 actually ends up being a dead-on confluence mark. The 38.2 retracement from the advance off that April low we made last year, the 100% extension from the decline off the highs we made this year, and also the only caveat I'll put on it, Mark, is this, man. You have the yearly open at 150.22. If this is going to maintain if it's going to maintain the gradient to the upside, or we're going to maintain the upside bias, you'd expect to see a little bit more of a stringent support down there. So watch that first. And then the secondary target, I love this region. You also have the 100-day moving average right at 149.05, just below it. So it looks pretty good. Just watch that first region and the median line off the highs here. You might get a rebound first. He says, sweet, yes. I took the screenshot. The yearly open ARG. Really need to mark that on my charts. Thank you. More than welcome, Mark. I love the trade, man. You got a beautiful entry. You got a beautiful entry. Just, watch that that median line, that monthly open, or the yearly open rather. I think will be a nice setup there. All right. So let's jump right into the charts from last night. We'll go take a quick look through the intraday update, and then we'll take a look at some of the radar charts. So for me, I've been really all over the Kiwi, guys. Aussie as well. I've been in and out. CAD yen, I haven't really touched. I kind of just wanted to present it here, just give you guys a look at of what I'm looking at. I also presented this on Daily FX. It's not going to be really our best scalp for the night, but Aussie and Kiwi certainly were well in play. So here's what the Aussie looked like last night. Now, you got a short signal right here, and we were actually short as we published this. The market started running really quick You're looking for about 26, 25 pips per scalp. The major key support structure was still 65.50 into 65.47. You had the median line off the high. You had a confluence of the 100% extension and a 50% retracement right there. As I said in the note, we were holding shorts, but I wouldn't put it past this thing to still make another run at that upper median line parallel, before selling off again. So in fact, we did come right into that 65.50 level. We took off half of the trade, a little bit stopped out at, I think, like 18 pips. There was another opportunity to get short last night, deeper in Asia trade, came right back into that region again before finally making a rebound. Now we're pressing right into that 66.07 region. Remember, as far as the swings side of things, we're still looking for short exposure there near 66.09 on that entry. Here's what Kiwi dollar looks like right now. First with the daily. Okay, so just to show you again that overlap, 65.50, the 50% retracement of the entire decline is 65.47. Really nice confluence resistance or confluence support region there, and a decent pivot in price. We're playing on the premise that we failed to break out the upper median line parallel of the descending channel, and that we've broken below the lower median line parallel, of the ascending channel. So it keeps us within this broader structure here on the Kiwi dollar. Here's what it looks like on the 30-minute since the weekly open. So this is sort of the structure that I'm working with. Here's your weekly open. You saw a break yesterday. Here was the initial short that we took. Okay, you got another rally that offered a perfect another short trigger. I missed that second one. Literally, I was writing the Aussie piece when it gave out. And then that divergence into the low was sort of a tell here that we were going to see this thing give us a little bit more of a substantiated pop. We just capped out right around, I think it was 66.04, if I'm not mistaken. 66.04 before turning lower. I'll still be looking heading into US trade to see if we can get one more spike into that region and a possible sell near 66.09. 66.07 is the opening range low for the week. Okay, and then again, we'd be looking to target first at 65.50 and the subsequent downside targets. But keep in mind, again, 27 pips per scalp is really the name of the game here. So Mark saying, Kiwi, the theme of the last 3 months is can't be bullish enough. Wonder if that holds true still. I don't know. You know, for me, I'm playing just the near term turnaround that we're seeing. This is sort of a major floor. Okay, it's 100% extension off the high. So if this is just a simple correction within a broader advance, you'd want to see this hold. So that's why as we get into 65.50, we've been taking off that short exposure. Here's what it looks like right now. And again, Eileen, this will help you out. This is the way I'll be watching these scalps as we get through them. Just a confluence here is a 5-minute chart and a 1-minute chart looking at the triggers. You did get a trigger earlier today. Again, I was setting up the room, so I didn't get a chance to jump into this one. That in mind, I do think you probably get another push higher here before you turn around if we can get a short exposure into the US trade session. Maybe another poke at that 66.07 region. But last night, here's what the trigger looked like on the 5-minute. I thought this would be a good drill for you guys. And here's what the trigger looked like on the 1-minute. Okay. And the sort of the thought process behind taking these shorts last night, you know, you weren't really at resistance. And I'm always an advocate telling you guys, look, if you're going to try to jump into a position, you always going to be more beneficial when your stop is against an opening range high, a major resistance or a major support level. So here, as we rallied, here's your Sydney open. Okay, and on the open, you got some divergence into that high, followed by a trigger break. The trigger happened right here. We kind of came back, we sailed through it again, but guess what? That top peak we made was just another divergent signal. Higher high, higher high, higher high. You come into the 5-minute chart, you see a really clear 3-point trigger break right there. I didn't take it on the break. The market came back, tested that trigger as resistance, and that's when we had and jumped in. Okay. And the stop, like I said, is right above the Sydney opening range high. So on a trade like this last night, guys, literally the stop was like 15 pips. So as you got in, we came into that right ahead of that support level. You did see that momentum was holding against 50 here. That's some pretty strong divergence as well. Really much steeper low, slightly higher low. So we took off half the trade there. and then we left it on. Look, if it breaks through, great. We'll ride it down to 65. If it doesn't break through, then we'll bail out when we get the first long trigger, and that's what we got here. So subsequent to the entry of the trade, we're always tailoring to what's happening in now in price. And you can see that this trigger break here broke to the upside. That was my signal to jump out of that position. Now, just minutes later, you did get, like 20 minutes later, you got another trigger break to the downside right there. And again, I was just writing the Aussie piece. I missed that. Literally, I caught it just as it was breaking down. I wasn't going to start chasing. But this was another one. Even with a short from here, guys, 72, stop against the high is still 83. That's still 11 pips. Okay? And you will have been went on your way again to that 25 pip scalp to the downside. So at this point, we made a little bit more of a substantiated rally. Like I said, we came into that region, just missed the entry for the swing trades. We'll have to look if US Trade offers us anything else. But I still like, trying to get a short into this region. If this breaks, just for to put this on the table, we'll look for short exposure heading into 64.40. If this gives out or we don't get a short trigger, I'm not going to do anything. The bearish invalidation level is going to be the objective weekly opening range high, which also coincides with the key 618, 66.77. And the 200-day moving average right at 66.77 as well. So you know exactly what the invalidation levels are. For Kiwi dollar, it's 66.77. Looking for short exposure, looking for rallies to sell below that region. A break below 65.50, 65.47 is really what's needed to get the continuation of the broader downtrend going. Any questions on the Kiwi setup from last night? Eileen says, perfect. Thanks for the look back drills. You're more than welcome. Mark Boutros, the money making machine. Mario says, I was waiting for that one last night, but it was getting too late here in Europe. Yeah, Mario, on the Kiwi. Yeah, that last one kind of really irked me because I was really right there, ready for the cocked and ready to go. We'll get more opportunities. The market always provides, guys. So even if you miss a trade sometimes, I like to go and look back. Was the trigger there? Was my bias right? If it is, I count it as a win, even if no cash came out of it, just because we're in the right set, our mindset is in the right place. So no change on the levels or bias for Kiwi dollar. And of course, again, swing sides are still looking for entry near 66.09. All right, so that is Kiwi dollar. Next up on tap is Aussie dollar. So for the Aussie, we're a little bit more on the favor of the long side. And here's what the Aussie looks like. First on the daily chart, just to show you kind of where we are in trend. The major factor I want to say that I'm looking at is the price action that we saw last week as we dipped into 69.85. This was a huge confluence, guys, right here. Specifically on the 9th, if you guys remember, you had the 618 retracement of the entire advance off the yearly low. Former upper median line parallel, resistance, breakthrough, now support. Current operative basic channel support. And add to that, this channel here that we were working with earlier, late last year. Channel resistance, pivot, pivot, break, pivot, now support. All of them right here. And the magnitude or the sharpness, decisiveness of the price action with the rebound there does keep the focus higher, at least in my opinion. Now, from a momentum standpoint, you really don't have much push on either side. You're seeing it flatline just above 50, giving us a slight upside bias. But certainly, for me, wouldn't put it past this thing to make another dip into that region, but broadly looking for long triggers here on the Aussie dollar. Here's what it looks like on the 30-minute. So on its face value, and what I wanted to highlight sort of in yesterday's piece is that this thing has set a simple weekly opening range. So here's what we looked like last night. It set a simple weekly opening range, 70.83 as support. You're looking at that key confluence region, 71.77, 71.71 as resistance, and we'll look for a break here to give us or to validate rather our near-term directional bias. We would like to play alongside the ideal scenario. If you put a gun to my head and say, Mike, what's your ideal play? I would say you see a breakdown with the weekly opening range into this region, you get a beautiful opportunity to get long. The broader bullish invalidation is down here. Okay, 69.86 is not only the key 618 retracement, but it's also that swing low that we made last Thursday. Okay, and would necessitate a break of that confluence region of support. So this is going to be our broader bullish invalidation level. We're looking for long triggers above 70.35. We need to clear 71.77 to get the upside going on Aussie dollar. So what does that mean, Mike? You're telling us all this great stuff of what could happen. What does that mean for right now? For right now, guys, the only thing I'm scalping is the range. That's it. So if I'm taking any shorts on here, I'm getting out the range lows. If I'm taking any longs here, I'm getting out on 26 pips per scalp. But even if I'm not at 26 pips and we're at the range highs, we're going to go ahead and clean that up, bring our stops to break even, take some off the table. You want to be nimble, especially in this market condition. You want to be nimble as the opening range holds, because once it breaks, it's going to go, right? You'll have that directional bias conviction there. But until it does, let's play nimble. So that's sort of my game plan here with the Aussie dollar. Haven't taken anything here this morning. It was similar setups that we were playing with last night, but we'll be looking for a definitive break of this range. Long side is favored. Keep in mind for the Aussie dollar, we do have tonight Aussie dollar employment figures on tap. Just a quick review of what that report or what that release will look like. So the employment change, we're expecting to see a print of 13,000. More so, and I touched on this yesterday, was the fact that last month we saw an impressive addition and gain in full-time employment, which is what you want to see, and a contraction in the part-time, which is suggesting, again, markets are moving towards maximum employment. So if we see that dynamic again, that's really, really constructive. As far as the unemployment rate, we are expecting that to hold at 5.8%. Okay. Also, ever since the Aussies rebalanced how they're reading the unemployment numbers, they've become a little bit less critical. But this is something that we'll always continue to watch, and that's the participation rate. Same deal here, guys. If you see a great or an increase in the participation rate, typically that'll put artificial downward pressure on the unemployment rate. Likewise, if you see this contract, that'll tend to put artificial upward pressure. Okay, so we'll keep that in mind heading into tonight. Craig says, really helpful to see the triggers you take and how you play it. Thank you again. Hey, you're more than welcome, Craig. And we'll do that more often, for sure. Graham says, hi, Michael, just joined. Wondering about the dollar CAD 5-minute trigger. Okay, let's jump into dollar CAD. No other questions on Aussie dollar. Watch that data later tonight. Again, we'll be looking for a clear definitive break of the weekly opening range. I would love a dip to get long. If we break the upside, wait for the pullbacks, and we'll also, again, favor the long side. Here's what, we'll take a quick segue here for you, Graham, on dollar CAD, because that was also highlighted in yesterday's radar charts. Actually, no, that was the previous day. But here's what dollar CAD looks like. So keep in mind, again, for the swing side of things, dollar CAD, we're holding shorts on that side from 38.80. Your stops are still 39.55 on that, I think. And we're looking for at least the initial target somewhere in the 37.90 range or so. I would be looking more towards that 38 handle just as an initial area of where it starts to shave off some of that trade. Here's the daily chart. Again, there's really not much to look for. The only thing that we noted yesterday that still remains constant is that the entire monthly opening range is still just the February 3rd and 4th trading days. That still consists of the entire monthly opening range. So you're going to want to see that sort of break. Here's what it looks like on the near-term chart. I know this is a little bit messy, guys, but I just wanted to point out again, we looked at this trend line yesterday, resistance, 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 break, support, support, support. 50% retracement of the advance gives you 138.08. That's what we're sitting as support right now. For the 5-minute triggergram, let's take a look. So the long trigger that you're looking at here, that's given out already, right? Right, Graham? I think you said the 5-minute chart. This is the long trigger you're looking at? Yeah, that's given out already. Now, 38.20. Yeah, the ideal would have been like that 38.10 region for a trigger in that region. Here you're getting some divergence into the low. That looks good. 5-minute chart or the 1-minute chart, don't really have much of a trigger here per se. This is the trigger I would have been looking at heading into support. That's what I would have been looking at. And on a trigger like this, guys, again, divergence into the lows. You're going to miss the trigger 9 times out of 10, okay, because we're just not that quick. But when the trigger breaks on the pullback, this is where you want to get on the entry. Why? Because that's going to give you the best risk to reward. Now my stop can be right against that low. So in a trade like this, not really going to be looking to play this right from here, Graham, to be quite frank with you. You might get a nice stretch to the upside. 38.45, you're looking for about 42 pips per scalp. Yeah, but I would need a little bit more of a compelling trigger than momentum up here already on the 1 minute. You know what I'm saying? So we'd wait for a little bit more of a pullback. Let's see if we can reset. Maybe this trigger will come out to mean something. If that holds, you get a downside move, then a downside break. Maybe get it on the rebound. If this breaks through on the pullback, take a stop against that low, looking higher. Might be a way to play it. Sure, absolutely. There's a lot of different ways you can attack the trade. The most important thing, and I can't hammer this home enough, more so than anything else in this strategy, is your entries. Okay, because we're working with very tight stops. So if the entries are off, it can be a very frustrating affair. Getting stopped back to back. Does that help, Graham? Does that make sense? Eileen says, on the 5-minute and the 1-minute triggers, do you always wait for the confirmation of a second trigger? Not always, Eileen. Again, we have to take every trade on its own merits, right? If the market is at a major support level and I'm seeing a very well-defined trigger and it's happening on the 5-minute chart, sure. I will always give a little bit more credence to the entry on the 1 minute for one simple reason. Remember, guys, the oscillator is only pegged to the close price of each candle. Okay, so while this might surge, go right through that 50 on this 5-minute candle, until that 5-minute closes, I don't know that the oscillator is going to peg up there. If that 5-minute candle turns around in the last 2 minutes of the candle and ducks below, this will look like it never even broke. Okay, so that's why we have to always remember how these oscillators are derived so we don't get ourselves tricked. It's only pegged when the candle closes. So for me, you're going to get that indication a little bit earlier here on the 1 minute, but I'll keep that 5-minute open. Once I'm in the trade and we get the confirmation there, great. Even more conviction on the position. Make sense? Cool, thanks for the extra detail, helpful. All right, cheers. So that is the quick segue there out of line of the order we were going in, but dollar CAD. So Graham, hope that helps, man. I do think you get a bounce, but remember, it's not just knowing the direction, guys. It's having the proper risk to reward and having a setup in hand. So we'll see if we can't get a decent trigger here on this dollar CAD heading into the US Open. All right. Next up on tap from yesterday, after Aussie Dollar, was CAD Yen. I don't want to spend too much time on this. Just want to kind of highlight where we are in trend. Look, this thing is in a very well-defined, wide-ranging descending ML formation off of it's really 2013 or 2014 that it stretches to. But here's what it looks like first on the daily. So this region right here, 2014, it's not even the actual high there. But you can see this ML formation. A couple of sliding parallels of the same slope has caught really nicely some major pivots in price. Okay, and we made a low day close in January at 80.60, basically 80.61. Guess where the close low was this month? Exactly at 80.61. Okay, actually the close was 80.63, but you get the picture. So all this thing has done from the 2016 open is set a very well-defined opening range for the year. Okay, here's your yearly open. You set a low, You test the yearly open, it fails. You test the low, it fails. And you're looking for a break of this range heading into end of February, March trade. Okay, so what I noted yesterday, we're just simply coming off of the lower band or the lower bounds of the range. So sure, look higher, okay, from this region. The actual setup comes in the fact that the weekly opening range is also readily identifiable. So here's your weekly open. Okay, you can see that we checked the weekly opening range lows twice last night. All right, this was during U.S. trade yesterday. This was last night in early. Actually, this was early European trade before coming it back. So we're looking for either a break below the weekly opening range, looking at like 81.65, 81.68, or a breach of this basic trendline resistance. And again, that dates back to the monthly highs. So very, very simple play. If you get the breakout, again, we'll look for the pullback to get back on the long exposure. If you get the breakdown, I'm going to be nimble, but I'll basically be looking to play targets into the low day close. Remember, for this, we're holding shorts on dollar CAD, right? That's long CAD, which is why I noted in the report yesterday, this might be a decent pair to serve as a synthetic hedge if you have any long CAD exposure and you see this break to the downside, whether it's on CAD strength or CAD weakness or yen strength, a break to the downside here might be a nice hedge position if we're loaded on the short side of dollar CAD, long CAD. Does that make sense, guys? So again, taking every trade on its merit, right? Dollar CAD was still like that lower if we can get the move. CAD yen, the opening range is objective. Looks like it's setting up pretty well, and we'll play that accordingly. If it does break to the downside versus our CAD position on the dollar CAD, like I said, might be a nice synthetic hedge to offset some of the risk there. Any questions on CAD yen before we move off? Okay, sorry, just reading through some of your comments here. Gotcha. Okay, you're welcome, Graham. So that is CAD yen. We're looking good on time. Let's jump into some of the radar charts from last night. So most of the radar charts from last night are in the majors that we've been following. Euro dollar, sterling dollar, dollar Swiss is something that's been sort of eluding me lately. I'm looking for a high to sell in dollar Swiss. If you guys remember the scalp report from Tuesday, but well, we'll go over it. First things first. Here's euro dollar from last night. You saw Jamie put a tweet on this literally like seconds before we published the scalp report. And he was talking about the ongoing divergence that we were seeing here for a possible move higher. Well, that actually gave you a decent move. And if you had the 5-minute trigger on there, you saw a nice trigger break to the upside. The rally extended up into 1177. Okay, you're only looking for 30 pips, so you actually would have gotten that squeezed out before turning over again. On its face value, this is also setting up a major weekly opening range above key support, the 618 retracement at 1120. And just below resistance confluence at 1257, 1252, 1263, this region right here. So for the euro, we're looking for a move back lower to get back on the long side. Personally, if we get a move here into 110.50, 110.45, this is a huge region of support. We haven't touched on the euro here in a couple of weeks almost on a scalp basis ever since we got this kind of price action here near the highs. But just to put things in perspective, just snap some of these levels for you. Just to put things in perspective, here's what we're looking at. Okay, remember, sorry about that. The break above the median line, this is the formation that we've been in, right? So a basic run back into basic median line support could still see this thing a little bit lower before we move off. Long story is we're still looking to maintain a broader constructive move here on the euro. So looking at it from a 30-minute chart, Again, if the weekly opening range breaks to the downside, I wouldn't put it past a move into this region. You have the 200-day moving average, the 618 extension, 1058, if I'm not mistaken, is a major swing high from somewhere. Oh, that was the 200-day moving average that I was highlighting. Okay, so you get the picture where key support is. If you get this drop, probable area of a nice rebound there that we could get in back on the long for the euro. Just a disclaimer, I haven't put any positions on the euro in quite some time. If you guys remember last week, we were all over the euro Oz, and I still do like it. I'm kind of just waiting for the euro Oz to give us a little bit more clarity before we start to highlight it here in the intraday charts as something that we're actively working on. Again, very similar in that you're putting in sort of a messy, ugly, but it's still a decent weekly opening range right above that median line support. So it's very similar to what euro dollar is doing, except you're seeing a much wider range. Euro Aussie gives you a 65 pip ATR, and from a scalping perspective, it gives us a little bit more flexibility. So these are still the same levels. Don't want to stress this setup, like I said, just yet, because I'm looking for a little bit more clarity. It would be a beautiful break if you get 158.30 to the upside. That's a clear opening range break to the upside. Also takes us back within the confines of this near-term ascent. And a break above that, you'd look for a rally right back into the September high day close. That's 160.95, just shy of the 61 handle. So beautiful move. Graham says, glad I held off dollar CAD. Yeah. You know what? Here, I'll show this to you again. A perfect example, right? This looked just a second ago like it was about to break through, right? Guess what? Those 5-minute candles closed well below, and the oscillator is still preserving that same trigger. Okay, which is why you want to have them sort of side by side like this, because you don't want to get fooled with a topside break there, and then the 5-minute candle closes lower, and you get faked out. Now you're holding a long position underwater, right? The 1-minute chart will give you that a little bit more of a tell. Also, another reason, Graham, I wouldn't have wanted to jump into the long position there is because look on this stretch. Obviously, we've had a lot of candles since we looked at it, but look at the stretch into the upside. Momentum fails at 60. It's exactly what you see in downtrends, right? Multiple breaks below 30, multiple holds at 60. If we're in a really strong uptrend, we tend to see multiple breaks above 70 and multiple holds at 40. So you're seeing some pretty, what's the word? Readily identifiable or indicators here that, the near-term downtrend or the near-term down focus is still sort of in play. All right. So that was euro dollar. Moving right along, a quick look at the British pound. Another thing that I'm really hesitant to touch at all here, but it is at a critical juncture. And yesterday in the radar chart, I did put the 30-minute chart, but I think on this sterling chart, guys, the daily is really what you want to keep focused on. And that highlights the same exact region. So this is the same chart that we were looking at on last week's update for the sterling. If the chart wants to come up right here at the 43 handle. So this is a 618 retracement of the advance off the low. But more importantly, basic trendline support. The median line for the formation, operative formation off the May highs from last year, and certainly we've held this formation like clockwork, okay, for pretty much the latter part of the year. And a sliding parallel off of the September low gives us a range low. That's exactly where the close lows are right now. Okay, remember, we're sitting in that region right now. So for me, it's make or break for the pound today. If it sinks and settles below 43 on the close, sayonara. Look for the initial low day close at 42.18 to be your last threshold, and then you look for the actual stretch lows into 40.80. If it closes and holds above the 43 handle, look for a concerted rally back towards 43.80. And for me, this is going to be the near-term bearish invalidation level. A little bit unorthodox from what we typically do. We typically want to see a break of the descending channel, but this has been such a clear-cut pivot in price that if price does close above that 43.80, I'd like to have that as my bearish invalidation. Look to resumption for the broader ascent off of last month's low. Okay, so for me, all I'm doing today for the sterling is I'm looking to see if we close above or below 43. That's it. In fact, we even noted this key region here yesterday, and it's exactly where this thing found support. 42.58, 42.47. This is the 100% extension off of the highs. And 42.48 is actually the monthly open. Okay, so nice area of support. You had basic trendline support also in that region. By the way, when I'm looking at this trend line, some of you are probably asking, well, Mike, why don't you have it extending off the low in price here? You can do that, and that's typically probably more the traditional way to channel your charts. But for me, what I like to look at are major key swing highs. And if you take it to the last swing high there on the left, oh, right there, look what happens. Catches that low and caught that low almost perfectly. Okay, so a little bit of a different type of mentality and channeling, but you get the picture. So big support. Watch the pivot around 43. If we do close above, I'd look towards a little bit more of a rebound recovery, if you will, towards that 43.80 level. But it's flirting with disaster here, I think, if you close below. For the sterling, looking for longs then at the lows if it breaks down. Looking for longs then at the low if it breaks down. No, Eileen. So for this sterling, if this breaks below 40, if this holds below 43 on the close, you're likely to see this thing drop. Like I said, it's probably going to be a disastrous drop. If this gives out, you're looking for a target at 42.80, the low day close, but more, you're pretty much looking for resumption of the broader downtrend. This is like last ditch effort. So today's close is going to be paramount. So looking for shorts on some rebounds. No, Eileen, I want to know why you're thinking short side though. I want to know why you're hung up on that. So the trade is at a major key inflection support. If it breaks lower, oh, I'm sorry, I was reading it right. If it breaks lower, Eileen, from here and it closes lower, yes, we'd be looking to sell rebounds. You're absolutely right. Okay, but right now, as it stands right now, I don't want to do anything. I want this thing to close above 43, and then we'd look to buy pullbacks towards that 43.80 threshold. If we close below 43, still not going to do anything. If it breaks 42, this key barrier we just rebounded off yesterday, yeah, sell rallies. Your next target's down at 40.60, 40.78. Nice confluence region. That's a low, and that's the 1618 off the high. Does that make sense? Okay, Eileen says, okay, makes better sense. Thanks. More than welcome. Yeah, sorry, I was reading that wrong. You're right. If we close below this and it breaks lower, the mentality is sell rallies, right? Question, why not draw a simple trend line from the 145 high? Why not draw a simple trend line? What do you mean from the 145 high? Mark, that's a typo there. I'm not sure what you're trying to say. From what? From there? A trend line from here? You mean something like this, Mark? I tend not to favor trend lines that are so steep like that. It's just in my experience over the years, you tend to think you treat it as a breakout, but the breakouts of a trend line that steep can sometimes be pitiful. They'll be like a 236 retracement, they'll just move right off. So remember, always going to be better the more touches you have and the more gradual the gradient. The more aggressive the slope, the less emphasis, as it were, that you want to put on it. Make sense? He says, understood. Yeah, the steepness, got it. It does fit nicely, though. I grant you that. Sure. Sure. In fact, let's just take a quick look at what the sterling looks like near term. Yeah, this is no fun for me here. So again, we want to always look relative to the session that you're in. Where are you? For the London session, which started here, you're right slap in the middle of the London session. London lows comes in at 42.50. London highs come in at 43.40. You're sitting right heavy in the middle. So I still would be rather take this trade from one of the extremes. Again, as you're straddling 43, guys, just be careful. Look for a resolution away from 43. Either a break sub 42.50, or like I said, a break above 40, or a close above 43, in my mind, would give us fresh run for this rally here into 43.80. It's notorious, guys. Sterling dollar. What can I tell you? It's notorious professional traders market, notorious for the throwover, the break of resistance and pullback, the breaks of support and recovery. So we'll want to be a little bit more cautious on this one. Any other questions on the British pound? Last but not least, I do want to just touch real quick on the key dollar Swiss. This is the report that we published the day before. Remember, we were looking to stay constructive, okay? And as this thing showed some divergence, just as euro dollar was showing some divergence to the upside, this was showing some bearish divergence. So I noted last night, look, the immediate focus is turning lower from here, specifically if we break that median line. But I'm still looking for a high to sell. I'm still looking for a stretch high to sell. And that's, I think, what we're getting now. You got a little bit of a break lower here yesterday, but then we just broke through the highs. So I'm on the lookout for a near-term rally near resistance to get short. Here's what dollar Swiss looks like on the daily first. Okay, you got the 100-day moving average. This is the 618 extension from the decline off the highs, confluence region there. Beyond that, you're looking at 9957. Remember, we talked about this yesterday. Excuse me. The broader bearish invalidation is above parity, parity 30 here. Former trendline support, now resistance. The 618 retracement of the entire 2015 range. This right here is your 2016 open. Okay, lot up there, lot up there. So ideally, you would get a short position off that. Might not quite get the rally, but here's what the 30-minute looks like. So again, from yesterday, got that little break to the downside. You might have squeezed out 26 pips. I didn't get involved in it. The break didn't happen until later in the night. And then here's the rally breaking through the highs that we made in the US, the highs that we made in Asia. And here we are, first target, that 100-day moving average. We're basically there right now. And then we'll look to see if we can get to that 99.58 level, that 50% retracement. Another look at this, another thing to keep in mind is, as we were trading this yesterday, if you got suckered into the short side here, if you held that short bias that we were turning yesterday, look at momentum. Break into overbought keeps us constructive. Hold at 40. Hold at 40. Break above 40 again keeps us constructive, right? And until this phenomena changes, the broader momentum signature, the broader momentum profile points higher. Eileen says, dollar Swiss still inverse to euro dollar. These days, they are starting to work a little bit more sharply on the inverse side, Eileen. I don't want to take that as a status quo for all time at any time I jump into position. Still want to take every trade on its own specific merits. Because remember, guys, we don't want to try to equate it like that. For example, the Kiwi dollar, we're still favoring, the short side. Aussie dollar, again, I'm personally still favoring the long side. So we don't want to give kind of static biases across the board just yet. They are broadly working inversely still, yeah. So now that we've cleared that high, I do want to note these levels need to be changed, right? Need to be changed to reflect the new swing high. I'm not going to go and tag it to the high as we rally. Doesn't matter. The only thing that needs to focus for me is now support right here. And once we've made a concerted streak into this upper median line parallel, into the 50% retracement and come off, once you get a short trigger, then we'll go ahead and tack that new retracement to the new high and see where the downside targets take us. Any questions on dollar Swiss? Saying euro dollar breaking below that 1120. Euro's making a move right now. Yes, it is. Ah, there it is. That would have been your trigger. 1, 2, 3, 4 touch trigger. 28, 58. Ooh, just would have made the risk to reward ratio. Just barely. Just barely. Again, nothing I would have necessarily been wanting to jump into per se, just because you're selling into support. But now that we're breaking that 1120 low, like I said, I would love to see if we can find some rebound, find some long triggers here. I think that would be the ideal play here, guys, for the euro. And again, that would complete that 618 extension off the heights, 110.45. Oh, by the way, that 110.58 level, that's the swing high for December. I knew it was some sort of swing high. So we'll be looking to see if we can find some support here on this drop later today. Eileen saying, but there's divergence on the 5-minute higher. So remember, Eileen, divergence is telling you momentum is waning. It doesn't give you indication on time. So you can hold a divergence signal and continue to drop in price for some time before it turns. This just sets the stage for, if we start to see some upside thrust, looks like it's getting tired. But as the market is tanking, guys, be careful of trying to call divergence in momentum, because you can really get stung doing that. You want to see a concerted low, a concerted rebound, and a test again of the former low as resistance before we start to get too confident about a divergent signal. It might be a false break type of deal here. Oops, sorry guys. Okay, Eurocat could be a nice long if it doesn't break below 153, says Dave. Dave Freeze. Hey Dave, great to see you in the room. Eurocad. Let's take a look. This is Mark was looking at this earlier, right? Oh, it's right here actually. Yeah. Could be a nice long if it doesn't break that 153 handle. If 53 holds, it's the weekly opening range low. Absolutely, yeah. Let me see what the 5-minute looks like on this. Yeah, sure can. This might be a decent long, absolutely. Trigger break, some divergence into that low. I like it. Not a fan of buying things that are in oversold territory, but remember, if something's oversold, that means the market has that much push that it's been able to push the indicator into this depth. So it's the cross back above 60, or 30 rather, excuse me, that would be the signal for the buy like here. So just keep that in mind. And 53 is a 618. Yeah, decent move. I like that. Who was that? Dave. Nice, nice observations there. Hussein saying pound is moving as well. Yeah, so pound is making another move on 42.58, 42.50. Big region, guys. Real critical. See what the pound's going to do. I'm not really going to touch this until we get some clarity and clear that 43 region on sterling. All right. That is all the setups that we have on this end. We went over dollar Swiss. Again, we'll be looking for sort of a resolution near that high or that stretch high to get back on the short side. Just a quick touch on some of the commodities, guys. Here's what gold is doing. The high that we made last week was a very critical region. We talked about this, 1240 and the pullback. Look, I would expect this thing to make a nice little recovery here, then look for a new low, okay? And I think you buy that new low. The first basic 38.2 of the advance off the lows from December. So this is broadening beyond the 2016 range, takes you into 1181. Depending on where you are in time, it'll also start to coincide with the former upper median line parallel, which should offer some support. So somewhere we would start to look for some gold support would be sort of like here. Okay, 1191, by the way, where we rejected yesterday as support, that's the exact swing high from October. So maybe another push higher here near term and another drop into this region, and a little bit more of a key support hold there, I think would be on the cards here for gold. Again, watch broader market sentiment. We're seeing a little bit of a rebound here and broader risk, but still got you still got those inflation numbers later in the week. Moving into crude prices, also people have been talking about this and will continue to make headlines, specifically on the back of yesterday's news that we're going to see some sort of production freeze from Saudi oil ministers. At least they're saying that 3144 level that we talked about yesterday was the high, and that still continues to be the major breakout level you would need for a more concerted recovery here in crude. Key support, we're still going to watch that low day close at 27.24, resistance 31.45. All right. Eileen saying strong dollar again, driving the dollar crosses. So we didn't talk about this chart, although I had it up at the beginning of the webinar. Look, do you guys remember what the bearish invalidation level for the dollar index was? We talked about it early in the week. 112 or 12,123, 12,131. This region right here. Okay. You're looking at the 2016 open here at 12,131. 12,123, I know all of you guys remember that. That was the April high day close and a huge pivot in price all into the close of last year. Also coincides with the basic median line off the high here. Okay, I didn't want to add it because it was too complicated or it was too messy, but also the 38.2 retracement of that same move comes in right here as well. So I'm looking for the dollar to find some resistance as we head into that 12,131 level. If that breaks, you're likely to see a lot more upside here for the dollar before we move off again. But I am looking for near-term resistance here on this stretch. All right. Okay. So that's what I have on my end. If you guys have any last minute questions you'd like to review, feel free to throw them on the message board. If not, a quick reminder again that my man, Mr. Jamie Setley, will be on later today at 1 o'clock for the midweek strategy webinar. Go over some of those positions that you guys are holding there. Again, the Aussie long, loving it, dollar CAD. On the short side, he's looking for that Kiwi. See if we can get that 6609 region. Did we make any moves on Kiwi? Turned even farther. So again, we'll see what the U.S. Open has for us if it's got one more stab near the highs here. But I do like those moves. And again, I've just been getting out of the trade as close as we can near that 65.50 level. That's really the level you need to beat to get the validation for a broader continuation lower here in Kiwi. My most active scalps, guys, this week, still Aussie dollar and Kiwi dollar. So we'll keep you updated on SB Squawk. And again, don't forget, 1 o'clock, Jamie Setley will be up. No other questions. We'll go ahead and wrap it up here, guys. Wish you the best of luck trading, and we will see you all tomorrow morning. Cheers.